Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Wednesday, August 26, 2015. We're going to take out the free trial bar there, folks, so you can ask your question and have the full screen. So if ever you have any questions, any strategies you'd like to think about, definitely don't hesitate to ask me any questions. It will be my pleasure to answer them. In terms of news today, we had the news concerning the Chinese Central Bank. We're always going to continue to talk about China today because China continues to make the headlines. The Chinese Central Bank announced today that they injected $20.8 billion into the system. Another headline today was the announcement, but the speech made by the Fed chairman of the New York Fed chairman. And what he said basically is that the Fed is going to base his decision to raise interest rate depending on the data it has. It says that the recent market turmoil, investors should not overreact to that, which means that it's not because we had a lot of fears in the market that markets declined by almost 500, 600, 800 points that this is going to be enough to make the Fed not raise interest rate. So with this situation, we definitely have a market that continues to be in an in-between situation. We have NASDAQ here that stays neutral, Dow Jones here that stays neutral, same thing too for the SPY, but it remains a rebound or that remains fragile. We cannot say that it is a solid bottom on the markets. Same thing too on the TSX because the risk that we go down further is still present. Actually, what we're waiting for, I want to show you here the SPY situation. On MarketGurus.tv, this is what we have been advising our customers or viewers to look for. For instance, we had here the situation where the SPY was resuming its downward trend. Now, how can we confirm a bullish divergence? What is a bullish divergence? A bullish divergence, that's if the SPY goes lower than its former bottom. So if it goes lower than 188 today or 187, right, go lower, while the MACD is higher. So if the MACD stops around here, that will confirm a bullish divergence. And then we can confirm that the rebound that's going to happen is going to be strong because we're going to have a bullish divergence because we're making a new low while the MACD isn't. And this is why it's called a divergence. But we do not have that yet for the moment. So there's no way that we can say that right now that you should either buy, either short the market. It is true that there are some stocks that are beginning to confirm a short-term bottom. They remain fragile, which means that I would not today feel comfortable to buy those stocks. However, I'll feel comfortable to put them in my watch list. I want to show you some stocks here, like Facebook, for instance, which is, look at this, testing an important upward trend on a yearly basis. So that could be a bottom on Facebook, but it still remains fragile though, right? We have weakening volume on that stock, and also we have a stochastic where the wave of buyers is there, but it's not consistent enough. Google is also in the same situation as well. Amazon too, Netflix, Starbucks, Apple. But those stocks, as I said, they're not a solid bottom that's enough to be able to say, let's start to buy some stocks. Gold is actually one of the sectors that remain weak. The appetite for gold is not as strong. I'm seeing more of a selling pressure on gold right now. We have look at the MACD. However, the thing that's a little bit positive is the fact that the 10-day, which is in red, has not yet crossed lower the 30-day moving average, which is in yellow, and we're testing this upward trend. Therefore, on the short term, because we have tested that bottom here, we might actually have an intraday rebound. But this intraday rebound will be limited towards 108.50. So it's going to be possibly interesting for day trading. But there are two risks for gold. The major risk is if ever the Fed raises interest rate in September, because the Fed chairman today of New York didn't give us any clue that the Fed is not going to do so. And so far, if ever the Fed raises interest rate, it's definitely going to be a negative for gold. And this is why I think there's some weakness there. Now, concerning the gold sector, we're testing an important support that could confirm a bottom on gold stocks, but so far it's not clear. But it's really the silver that it's taking a hit. 3 days of decline, I agree, so it's kind of not interesting to open a new short positions or going into some bearish ETF, but definitely bearish ETF on silver are really, really interesting because on a yearly basis, it's an all new low that silver is doing. So we're going to take a break, and after we're going to get back with some of your questions that you have.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
One major news today in the energy sector is that Schlumberger that you see here is buying this company here, Cameron International. It's a first trade that we're seeing here. So who's going to be next right now in the energy sector? As I said, it's a trend that could continue in the energy sector with the weak oil prices. Now, the thing you have to take into account in terms of risk, that brings me to the questions here from Adam, is it time to load up on oil? Well, first of all, Adam, if we take a look at your question here, is it time to load up on oil? I would say that it's not the perfect timing to do so, but there is some stocks that you should watch. We still have a weak oil environment where oil remains within its downward corridor. I insist on the fundamentals. Supply is too high. Demand is not strong enough. Analysts expect that demand will meet supply only at the mid of 2016. So is it going to happen? So far, we need the economies to grow at a faster pace to consume more oil, and it's not what is happening right now. The ECB today, one of the ECB officials said that they doubt that economies will actually grow enough to reach their inflation target. Now, if we take a look at the energy sector, for instance, here, Are there some stocks that are interesting? Well, the energy sector continues to remain within its downward trend. As I've said yesterday, for me, as long as the energy sector doesn't go above 170, 172, I would not buy any energy stocks. So it's not time to load up on oil stocks. However, just like the big caps have shown you, such as Apple, Facebook, that are confirming a short-term fragile bottom, there are some stocks also in the energy sector that are doing so. They are rare, but I'm going to show you the list of some stocks. So what I advise you to do is to put those stocks first on a yearly basis. If we take a look at this stock here, for instance, Raging River Exploration. So we have Raging River here that is actually testing support there, right? That corresponds from that top to that bottom. That corresponds to the 23.6% retracement. So this is a point where we're confirming a fragile bottom. But are you going to buy that stock here? No, because it's not a bottom that's solid enough. To be solid, we need at least 2, 3, 4 days within that sideways formation to confirm that at 702, buyers are always stepping in to allow the stock to stay above that support. So it is a fragile bottom that is forming on Raging River Exploration. It's a stock that should be watched whenever we have the energy sector above 170, 72. I think that will be a stock where I feel comfortable to buy some positions. Never forget Suncor. Suncor is reaching also an important support. It has been tested many times, but right now it's the second day of rebound. So we need at least 2, 3, 4 days there to confirm that this bottom here at 33 is rock solid, that you could feel comfortable to buy some stocks there and put your exit point below 33. But I would not get in today. Keyera Corp, look at that stock here on a yearly basis. It's testing an important upward trend. It has reversed it yesterday, 2 days ago, sorry. Now it's stabilizing there. So we cannot say that it is a point where we're going to have a rebound. Buyers are not stepping in as much because the stochastics is not towards 30%. However, Keyera Corp has to be watched. Keyera Corp towards $38. That stock will be a buy for Keyera Corp. But right now, if you take a look at this stock on a yearly basis with the stochastics, we still see the selling pressure is there on a stock like Keyera Corp. So this is the list here. All those stocks are Cameco. Let's not forget Cameco, which is reaching an important bottom. So far, we do not see a wave of buyers consistent enough to allow Cameco to be a buy. Cameco will be a buy towards 1712, 1725. But so far, it's not the case yet, as long as we do not have a stochastics towards 30%, 40% range. So a list of the stocks in the energy sector that I think could be interesting are all the ones that are highlighted with an S. So if ever we do have a clear confirmation of a bottom, I think that those stocks will definitely be interesting for a potential buy. But right now, it's not the case. Now, one question here, is it possible to short HVU? Well, usually I don't have any clue if it's possible to short HVU, but if you want to go the inverse of HVU, I would suggest you to go with HVI. So instead of shorting HVU, going with HVI, it's the inverse. So this is actually an alternative instead of shorting HVU, because the thing is that I know on HVU there's several split or stock consolidation that could happen. So if ever HVU is going to witness a correction, well then go with HVI. This is actually a way to short HVU, and it is actually a ETF. Now, as for the day trade of the day, folks, it's that stock here. It's CLD, a stock in the coal sector. It surged today. If we take a look at this stock here, give us some entry point, but they were limited. We had one entry point here, another one there. Now the stock stays flat. Still a wave of selling pressure on that stock. Next entry point, it's 368. I don't know if the stock could go further higher, because at 380 we see the 50-day moving average is meeting that stock. So I think that at this point the buyer's appetite is not going to be as strong. If we take a look at the market situation, we still have a market situation that remains weak. So far there's no bullish divergence that is confirmed. Gold stocks also remain weak, but they're stabilizing at the support. Silver stocks are the weakest. This is why the mining sector is taking a biggest hit. Energy stocks stabilizing, staying flat. It's not a time to buy at all any stock. I think you should definitely and continue to stay on the sideline, because even if some stocks are making an attempt to start a sideways formation, we cannot say that overall that we have conditions to say that stocks are having a solid bottom and it's time to buy. So staying on the sideline today remains the best alternative. So that's it, folks. See you tomorrow on the Swing Trading Show on DecisionPlus.com. I think you should stay on the sideline. So today I'm not going to wish you good trading. I think to trade, you need to see a clearer direction in the market. So far, I think you can definitely stay on the sideline, but put some stocks on your watch list whenever the next cycle comes. But so far, it's not what's happening. See you tomorrow.